Thank you for checking out the municipal market update from Philman Roll-Up and Associates. Philman Roll-Up and Associates is a municipal advisor to government. My name is Adam Bauer, and I serve as president and CEO of Philman Roll-Up and Associates. We start by looking at the municipal market data yield curve and how it's changed over time. Those gray bars going from years 1 through 30 represent the interest rate range for each one of those maturities. So it's been as low as the bottom and as high as the top. That red line represents that MMD for each one of those maturities as of 9/3/2021. Hopefully what you're noticing is that red line is near the bottom of those gray bars. The red line is just slightly higher than the last time I did a presentation like this 2 weeks ago. The earlier maturities, I believe, are just slightly higher. But hopefully you notice is we're near the all-time low still, especially on the front end of the yield curve. You get past year 4, we start to drift off that bottom, but not by much. Interest rates still remain very low. On our next chart, I've talked a lot about the yield curve and kind of what investors want for loaning money for longer periods of time. And if they look at that red line, that's from 2016, and that looks like what I'd call more traditional yield curve. And then if you look at the two green lines, the lighter green being 2021 and the darker green or even black, maybe 2020, both those are considered flat yield curves. And one thing that I found interesting this week was if you look at the light green, which is current, the shorter end, other than that first maturity or two, are a little bit higher than they were in 2020. And then the longer maturities are a little bit lower. So while I've talked a lot about how flat the yield curve, it does appear to be flatter than it was a year ago at this point in time. So that trend continues where investors are staying short and they're not requiring much. They're staying short for that first 1 or 2 year maturity, which is why those rates are so low, but then they're not requiring much yield for going out long, at least compared to historical standards. In our next chart, what we're showing here is the inflows and outflows in the municipal bond funds. The green are inflows, meaning money flows into those funds. Red, it flows out. And we've continued to see a lot of investor demand for municipal bonds, which is a key factor in maintaining those low interest rates. And on our next slide here, so I've talked about demand, money flowing into municipal bond funds, but how much supply is there available for investors? And that's what this slide tries to get to. And if you look at the last 2 weeks, 8/30 and 9/6, they're below some of the historical averages from 2019 and 2020. So you still have a lot of money flowing in, so that's demand, but you don't have as much supply for those bonds. That's downward pressure on rates. This chart is one I'm real excited to share with you. We haven't looked at this in some time. And what this is the AAA MMD is the lowest rates that you can get. Then you have AA, then you have single A, and then you have what we call their BAA. So the AA is that red line, the spread, and the single A is a dark green, and then you have the light green, which is the BAA. And what this tries to, when you look at the data in this way, what it tries to gauge is investors' risk tolerance. And so if you look at when we first all discovered COVID-19 here in the United States, you see that BAA, that spread got much wider than it had historically been and stayed up there for a while until it drifted back down. So as it drifted back down, that was investors being more willing to take on risk. But when it spiked like that, that was investors unwilling to take risk. And what you hopefully are noticing there is that line's been flat for all 3 of the spreads. And the BAA spread's a little bit higher than it was pre-pandemic, but not much. So investors are now very willing to take risks. Sometimes they call that hungry for yield, where they'll invest in a lower rated credit so that they can get some incremental yield off of that. But it's not nearly to the level they were achieving kind of mid-2020. But anyways, I think what this shows is, like I've kind of already said, is investors are willing to take on risk, and that's a good thing for a lot of our issuers who are not rated AAA. Next chart, just try to show some key economic data that's coming up. Certainly monitor these things because these things will have impacts on all different markets, but in particular, the municipal market. And now on our last slide here, we're just trying to show is our municipal advisors, our registered municipal advisors. I encourage you to reach out to any one of these individuals for more information on specifics of a transaction or any information related to the municipal market. But I thank you for your time. I will see you again in 2 weeks. Thank you.